Hello, traders. It's 8:02 a.m. Chicago time. Thanks for joining me yet again on Tuesday, the 22nd of January, 2019. We're almost through January. It is nice and cold and snowy here in Chicago. Hopefully you had a restful long weekend if you didn't trade yesterday, and hopefully it was worthwhile trading yesterday. Although it seems like it had a couple moves and it was quiet. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have risk off. Now, remember that because yesterday was a holiday, I basically do not include those bars in my analysis. The underlying was not trading at all. The volume wasn't there. Really, not much was there. But overall, the risk sentiment is risk off this morning. This is supposedly being driven by the IMF report predicting a slowdown in 2019 and 2020 for the global economy. In addition to that, the U.S.-China trade concerns have cropped up over the CFO of what is it, Huawei or Highway or something like that. I've heard that name said many times. I haven't caught it yet though. The electronics, the phone company, for non-competitive behavior. China said it would retaliate for this violation of that CFO's rights. Making things a little bit more, making investors a little more nervous. So whatever it is, the market is off. We did gap up on Friday, and we pushed about a 30-point range in the ES. Today, we did get some releases this morning. We got the Philly non-manufacturing, which was off. We got 1.0 versus plus 7.7 prior, and then ahead of us we do have a couple of numbers, or just really one big number. Existing home sales at 10 a.m. Eastern, expecting negative 1%. Prior is 1.9% month on month, or 5.25 million units versus 5.32 prior. Other than that, the calendar's relatively clear. Other than a couple of bill auctions, that's what we have. The EU released its zoo economic sentiment index. Consensus was for negative 20.1. Actual was for negative 20.9. And the German zoo current conditions for Germany came in of consensus 43.5, came in at 27.6. And so it's not the greatest news there, but overall, all we care about is the market is lower in price, and it looks like we are pushing for the lower part of Friday's range and potentially testing that gap. Let's get into our review. Friday, we were trading at 26.53.50 when the trader route was going on. And the expectation was for the market to chop around open auction out of range and then to pull back slightly, potentially to 26.45.50, 26.46. But the key plan was for the long, the anticipation of the long, to at least 26.70. Here's what actually happened. There's the open, 26.56. Well, you can see it on a 2-tick. 26.56 open. Right here, this little green dotted line. And what we did is we did have a choppy, look at this chop right here. We did have a choppy open auction type open. We reverted back to 26.47. Didn't quite get to 45.50. Left a gap between 26.47 and 26.45.50 of about a point and a half. And then we got the buyers coming in right here. You can see the delta getting a spike. And then from there, expecting 26.70. So the key target, remember, from the primary scenario is 26.70. It ended up pushing to 26.76, balancing out and then holding sideways. Two distributions on Friday. Okay, very clear LVN. We are below this low volume node. The low volume node is also value low at 26.58 and a quarter. 26.58 and a quarter. That's the price right here. And we're trading in a lower distribution. So it's imperative that that buyers push through, in my opinion, push through this 26.58 and a quarter area, and then take it up to the point of control to maintain control. Otherwise, we're likely to see a drop through the gap and an exploration lower into the prior day's range. Again, sentiment is coming in negative or risk off, and the European markets reflect that. So that's what we have on Friday, a double distribution profile, and the market having a what could be argued as a trend type day, although it seemed to balance out quite a bit in the afternoon. We didn't continue to move the point of control up. We simply moved it from the lower bound to the upper bound. So not seeing that as a trend day. I'm seeing it more as a normal variation day. In either case, it finished up fairly bullish above the point of control and near in the upper quartile of the range. And finished up strong. Could not get back into the IB once it broke. Yesterday, of course, Sunday, we open up Sunday at 6 p.m. That's off my charts because I scrubbed that out. And I'm just looking at yesterday's action, although I'm including Sunday's overnight high in the mix. And so it reverts back. Reverts back towards the point of control. 26.68 gets to 66 and a quarter, and then sellers come in, and ever since then we've been below. We tested the mid from below quite well, put in a lower low by a couple ticks, came right back to the mid again, and are holding steady at the point of control. We have today is somewhat of a B-shaped profile. Showing some long liquidation, again, risk off. I'm expecting that theme to continue this morning. To take a look at what we've done over the last few days here, last week really. Last week was a clear run up. We had strong lows all around. And we've pushed back into this microcomposite from mid-October to mid-December. Again, the key price to test is the point of control, 27.35 and a quarter. That's the equivalent of the old 27.27 or so. Once we get into the prior MC, this becomes the key area to test. You can see that in fact, this price here is, I believe, the most traded price in the last year, including 2018. This price was 2018's most traded price for the year, or the highest, the price that had the highest volume for the year, and it becomes a big magnet. So if we do not, whatever we do towards the bull side is likely to walk us up into 27.35 and a quarter. Although today may present a bit of a pullback to around 26.20, 26.28 for a continuation higher potentially. But overall, the market's done a good job of exploring higher prices and continues to gain by pushing for those higher prices so far. So we'll see now that we're back and out of our holiday break. We'll see how things progress today. What am I looking for today overall? I'm looking for a fairly quiet open. Not expecting whiteboard. Not expecting too much in terms of the action. However, I'm looking for an open auction, a market that is likely to poke down. I'm looking for buyers to step back in again and push us back into this 58 and a quarter and take us back into 68 even from about 48. That's 20 points of range. I'm expecting a fair amount of choppy trade in here in Friday's range. But the overall target, the overall key targets are going to come back into balance at the 26.68 and potentially push into the prior week's close or Friday's close at 71. That's the primary scenario. If we see weakness on the open, doesn't mean that scenario one is off the table. However, if we see an impulse on the open, so if we see an open auction that attempts the 58 and then gets impulsive down, then I'm looking for this to break through the gap and get back into 26.35 and a quarter. This area right here for an initial test, consolidate, and then push into this 26.25 area. 26.25, 26.26 is pretty important first test area. I'm looking to get long in that on the first test, not second or third. On the first test, I'm looking to fade this area at 26.26 if we get back down in there. Those are the key scenarios. I'm going to keep this short and sweet today just to ease you back in. Just remember that with your effort on a daily basis, do what you can to win the day. So make sure today doesn't go by without you making some sort of an advancement, some sort of a defeat of an error or an issue that you have. Make sure you're doing something with every single day that you're here. Good luck. I'll catch you tomorrow. Take care.